It is Monday, September 22nd, and we are here with Nikki Erickson with Kevnick Mortgage on the Monday Market Update. How are you, Nikki?
I'm doing great. How are you doing?
Lovely.
Good, good. Well, happy Monday, everyone. We are seeing some slight increases in mortgage interest rates this morning as a result of the Fed actually dropping interest rates last week. So what happens just as a routine for we talk about the Fed dropping interest rates, I talked about before how that kind of perceived improvement in interest rates usually happens around the 2 weeks before the interest rate actually drops because it affects the bond market. So what we call that is that drop has already been baked into the market. So what we were seeing is interest rates in the high fives, low sixes. Well, what inevitably happens is that a couple days after the Fed drops the interest rate, the actual bond market will respond to that in like the real time or real response to the dropping of that Fed interest rate. So that bond market will actually start to increase back up a little bit. So what we're seeing today is kind of just this volatile market that's going up and down. We also are right on that 25-day average, which when we see that in the bond market, we tend to have very volatile swings up and down in the market. So it should settle back down later this week. But as of today, if someone is looking to lock in their rate today or is wanting to, take a look at getting rates quoted and things like that. Today's probably not the best day because we're experiencing that volatility. So just something to keep in mind as people are considering looking at different options. With that being said, I want to talk about the Fed and their dropping of interest rates through the end of the year. So of the voting members that are on the Fed right now, as far as dropping interest rates, most of the voting members are less conservative than Powell wants to be when it comes to dropping rates. This is going to be good news long term, but as we kind of move through the end of the year, those voting members were really relying on them to keep dropping that interest rate to put the market back in line as to where it should be. And so a lot of what's going to be dropping throughout the end of the year is what we call catch up because people are thinking that, the economists and the experts are saying this should have started happening a long time ago this year. This should have been happening in, February and March, that time frame where I think we had talked about how, yes, hopefully they'll start dropping interest rates soon. So they waited a really long time and really longer than they should have in order to do this. So these drops that we're going to see are starting to take place from now until the end of the year. So I know I said this last week from a refinance perspective. We really want to see interest rates kind of ride the wave down through the end of the year before we really look at some serious options. The other thing I wanted to talk about that's been happening, especially in Minnesota, and so I've talked to realtors who have started to get calls from clients. I've started to get a lot of calls from clients in Minnesota, and this is also happening in Arizona and Florida as well. But in Minnesota in particular, the counties have started through all of this, the beginning of this year, that they are reassessing or reappraising the tax assessed value of your home and increasing your property taxes based on that. So the county has a right to go out and reassess your property at really any time. The times that they do reassess your property is if, like, let's say you pulled a permit for a renovation. Once that renovation is complete, they'll oftentimes send somebody out to the county to reassess value on your home to update your property taxes. Well, this is actually happening in multiple counties in Minnesota for homes that haven't had new tax assessed value since in the last 10 years. And so what people are experiencing is because October is when that new tax amount comes out for the following year, people are getting property tax statements that are doubling and even tripling their property taxes. And it has to do with the county not assessing the value of the home in the last 10 years. So if you remember, in the last 10 years, we've experienced, major appreciation in homes, especially during that COVID timeframe. And so when the county comes in and says, okay, if you could, let's say you could sell your house for 500,000, the county's coming in and saying, well, your tax assessed value is 460 or 440, where prior it was like 200. And so what we're seeing is a lot of catch up. I've had people go from property taxes of about $4,000 to now around $7,000. I've had people go from property taxes of around 7 to now it's upwards of 15. And so I've gotten multiple calls and multiple people calling me saying, oh my gosh, what am I going to do? I not only did I have to take a higher interest rate when I bought the home, but now I have a $7,000 tax bill and I've got a $5,000 insurance bill. What am I going to do? So I just want to tell people that if you're experiencing increases in property taxes or increases in insurance, reach out to me. We don't necessarily need to refinance, but there are some things that we can do to help relieve that increase in payment. Um, one of the clients was telling me this weekend, he said, it feels like between my taxes and insurance that I just bought another house and I'm making a double mortgage payment. Yeah. So it's happening all over Minnesota. I've checked with people in small towns. I've checked with people in the major metropolitan area. It is happening. These values are getting reassessed and the state is, or in the counties are wanting more money for the property tax side of things. So like I said, if you do have any questions or you are seeing this increase in taxes and how is that going to affect things, it just depends on your situation. We might end up implementing a refinance. We might end up saying, okay, these are some other things that you can do. One of the strategies from a refinance standpoint is yes, there is a cost to refinance. However, if your mortgage payment is going to become unaffordable because of the taxes and insurance increase, we've got to be able to implement a strategy to get that mortgage payment down. No one should be taxed out of the affordability of their home. So
Mhm.
call me, let's have a discussion. Let's talk through different options that can get that mortgage payment back in line.
Wow, yes. So, for example, I'm in Plymouth in Minnesota, and since we bought the house about 5 years ago, went from about four to over $6,000 over 5 years. So I don't know honestly if that's been assessed or if that's just been what's increased.
That
Is
seems
there a
about
difference?
average.
That's better. Okay, so
Yeah.
that's probably without an assessment happening.
Yes, correct. Hmm.
Wow.
Hmm.
Yes. Because I was just wondering what the difference is, because I know every year it goes up a little bit. But yeah, if it's still not assessed at what it would sell for.
Yeah, we're seeing $2,000 to $3,000 increases in a single year,
Wow.
in a lot of these homes. And like I said, for homes where, I mean, people that I've helped purchase homes with down payment assistance, people that I've helped purchase home that are first generation home buyers, you know, I've gotten calls from them and it's like, wow, we have to really, be cognizant of this and really help them assess what their next move is and what their next best move is.
Yep. So as an agent, checking in with my clients this fourth quarter coming up, if that's happened to them, and having them reach out to you, or we can say there's things that we can do potentially that can help with this. Besides refinancing, do you have any strategies or tools or resources that you can share with us, or a couple different direction that it might be
Yeah,
able to go?
so the main thing that I always do is I have them look at their insurance costs because most of the time when your taxes go up, your insurance goes up.
Mhm.
Insurance one is an easy correction. There's plenty of insurance companies out there and very affordable rates from that standpoint to help offset that. The other option is, like obviously what's your interest rate? Because if you're in the upper sevens, we can help you from a relief from that standpoint. The other option would be to call your servicer, talk to them about the balance in your escrow account. And if you do get a letter saying, here's your payment that's going up, we can talk about options to grab, the overage or whatever it is you're trying to make up for and pay it in one lump sum to try to keep that payment down as well. So for example, if your taxes go up $3,000, that doesn't mean your escrow payment is going to go up by that much. It means they're going to assess what's in there already and how much they need to make up for. A lot of times it's like $1,000 or so, but they'll take that $1,000 and they'll spread it out over a certain amount of time to pay back and then have a healthy escrow account again. But they do also offer an option of a one-time lump sum payment of, whatever that amount is to keep the same payment. So that you can keep the same payment moving forward, or it only increases slightly and not by these big chunks.
Yeah. Okay, no, that's good to know, what the options is, just so that we can help our clients or people
Yeah,
that are having questions about this. Because yeah, I know it's on a lot of people's minds.
it
It's a
is.
huge topic along with, like all the roof,
Yes.
insurance and claims going up, and I know that, something that, one of the agents that I coach ran into with a client is their servicer would not give them the mortgage or the loan or close on the home if the roof wasn't newer than, like, I think it was 10 or 12 or 15 years. Have you been seeing
Mortgage
that
company
at
wouldn't
all?
close? The mortgage company wouldn't close on it?
Yeah, or the lender. The lender was like, "The
Lender.
roof needs to be newer."
Oh,
Yeah,
interesting.
yeah.
I mean,
So I don't
we're
know if
on
it was
our
just a
side, that just
one-off.
has to do with insurance coverage and
Okay.
whether the insurance is going to cover it, unless there's something materially wrong with the roof via the appraisal. So if
Got
the
it.
appraiser went up there and said, "Hey, the shingles are curling up and this is pretty bad," and it would have to be pretty bad to be called out by an appraiser.
Okay.
Um, Other than that, I can't imagine that we would say, "Oh, we're not going to close on a loan where a roof is not
Yeah.
newer than 15 years."
Yeah, maybe it was insurance, not you say. It was a while ago, but that's more in line with insurance,
It is.
potentially.
And just so
Okay.
you know, there are companies that will still insure a property without roof coverage. So in other words, a lot of companies will say, we're not going to cover anything where the roof is 20 years or older, whatever their number is. And therefore, if their roof is that, we won't give them any insurance at all. There are insurance companies where you can exclude just the roof coverage and still have the rest of the remainder of the property covered by insurance.
Hmm. Okay, that's
Yep.
good to know because
Yep.
that can be something definitely that I've seen people run into. And so on the other end of that, are there insurance places that will just insure roofs potentially if you can't get it with
No.
your no, okay.
No, it's just
Thought
an
I'd
exclusion.
ask.
Some of them will exclude it, but no, you don't have an insurance company that just covers every roof.
Yeah, that's fair.
They're not really there to cover the roofs. They're there to make money.
Yeah, and roof it's, yeah, it's very apparent, and it's
It is.
becoming even more so that it's not working for
Yeah,
many insurance companies out there, so, no, that makes sense, and just wanted to ask all the questions that I know I'll get as
sure,
well, from people listening to this. Yeah, there's tons going on, so it's, being aware, staying up to date, getting on these calls, or listening again to the recording, either on Nikki's social media, mine, my podcast on Buzzsprout or the YouTube channel. So definitely staying top of mind and having really good conversations. And if you run into anything that you don't know the answer to or that stumps you, that's a perfect time to reach out to Nikki or myself, and we can either answer the question for you or get you in contact with someone that can for sure.
absolutely. Yeah, we're
Good.
always here to help.
Yeah. Well, wonderful. Well, yeah, that's a lot, and I'm glad that you brought that up because I know that it has happened here even gradually over the last 5 years. And so going back to real quick before we wrap up, the assessed value and getting assessed, is there anything that we can proactively do as agents for our past clients that purchased in the last year, 3 years, 5 years? To get them ready for this or proactively get them in touch with you? Would that make a difference?
Yeah, what I mean, they can definitely get in touch with their county to see if it has been assessed, but just preparing them and saying you're going to get your tax statement, and if it is a huge increase, let's talk about it. Let's talk
Okay.
about what needs to happen.
Yep. And you said that will probably be coming in
It
October
should be
from my
coming, yeah, pretty quickly.
so perfect time. We're
Yeah,
September 22nd. So
exactly, exactly. October 15th is when the next tax installment is due in Minnesota, and usually those values have those assessments have taken place throughout the entire year, and then they'll start sending out the next tax year's information.
yep.
So yeah,
Well, thank you so
yeah,
much for the heads
absolutely.
up. Again, that will put us in front of a lot
Yep,
of agents that aren't even, though they don't even have this on the radar, aren't paying attention,
sure.
or just not thinking outside the box. So, as always, Nikki, appreciate you showing up, giving us this great information, things to think about, and other tools in our tool belt that will absolutely set us apart and help our clients thrive in today's
Awesome.
changing market.
Happy to help.
All right. Well, until next week, everyone go out, sell something. And if you need anything at all, you know where to find us.
Yep. See ya.
Bye.